Alright, hey guys, welcome to the Adrian Finance YouTube channel. Today we're going to be going over one of my favorite monthly dividend income stocks. It's going to be ticker symbol O, Realty Income, known as the monthly dividend stock to really pretty much anybody that's interested in dividends. Just a little bit of information, they are a REIT. They're really known for their monthly dividends, so people who are like interested into not necessarily growth stocks, but more into cash flow every month, which would be really interesting to me since I'm really young. I could be able to compound interest for years to come if I'm continuously getting monthly dividends. So Realty Income is of course a REIT. They have a compound annual average on the New York Stock Exchange of 14.6% every year. They have $6.8 billion in dividends paid. So they're really consistent with it. They really want to strive to become like one of the greatest in dividend payments. They have 599 monthly consecutive dividends, so which is really good. So that equals out to around 51 years of consistent payments. So really, like, they're not going to go anywhere anytime soon. Really great tenants. So they have around 630 tenants in total. But really, like, the big ones that I like to look into are Home Depot, Kroger, Walmart, Walgreens, 7-Eleven, and FedEx, which are pretty much in their top 20. And it can include other ones such as CVS Pharmacy, Sam's Club, and AMC Theaters. So they're really great tenants. And they're gonna be locked down for a long-term deal because they're not gonna be moving Walmarts anytime soon. They're not gonna be moving any type of like FedEx distribution centers. They're not gonna be moving them anytime soon. So just to go over their income statement, they are increasing revenue every year. They are increasing profit every year. But it's not like a huge drastic level. It's maybe like a couple billion or a couple million every year. So far from 2015-16 through right now through 2020, they are increasing it, but not at a drastic rate. Their balance sheet, they are increasing assets, but they do have a little bit amount of long-term debt, which is kind of scary for a dividend payer, especially if like one of their big tenants weren't something were to happen to them, or they weren't able to pay their pay their rent on time. So it's kind of like in the leeway of a little bit of risk, but also a lot of reward, because if they can continue paying their dividends while paying their debt, it's gonna be amazing for any type of shareholder. So the pros, they are a real estate investment trust, so it's you can get away from like the tech stocks, you can get away from the consumer staples, and really diversify your portfolio in a really good way. Monthly cash flow, which is pretty amazing. Especially for me, an extra couple $100 a month, to be able to help me invest even more would be just amazing. And then again, with the compound interesting, you are able to keep growing it every year. So for example, if I put around I believe it was like around $20,000 into Realty Income, every month I'll be getting around like 150, 160, where I'll be able to go ahead and continue, with my month, with like at the $1,000 monthly that I usually do. I'll be able to add 160 to that to be able to reinvest it into Realty Income, or reinvest it into Coca-Cola, Pepsi, Apple, any type of company like that. So it's really great to have cash flow. And in the future, I'd really like to live off of dividends. So if every couple weeks, or pretty much every month, the Realty Income will be deposited into my bank, a couple $100 to be able to help out with bills, be able to help out with car payments and things like that. So it's really great for the cash flow side. And they have really good tenants as well too. So one of their pros is, they do have Walmart, FedEx, Walgreens, CVS, and things like that. So they're really big companies. They'll be able to pay their rent on time. With the whole coronavirus situation going on right now, I feel like all of their tenants are pretty much good, except maybe like a gym, or maybe like a theater. Those are really pretty much be like the only ones that I'll be kind of scared about so far, not paying their rent. But I believe in their last month they had around 80% of their tenants pay rent, which is really good overall. So the only cons that I see about Realty Income, of course, is their growth. So with the real estate investment trust, they're legally required to pay around like 90% of their incomes to the form of dividends. So growth really isn't there like in the long run. So every year they'll be growing around like 1 to 2%, in my opinion, so far as their balance sheet, income statements, and stuff like that. And then right now, with the whole coronavirus situation, they might decrease their dividend a little bit, just so they'll be to have like a little bit of leeway. So just in case a big tenant were not to pay their rent, or if in the future the coronavirus situation gets a little bit worse, they'll be able to decrease their dividend to be able to help pay for debt and stuff like that too. So where would I buy, and if I have any shares? So right now I have around 100 to 200 shares, I believe. Every month I'm continuously buying more and more, just because they're amazing cash flow. And one day I plan to have enough cash flow in the dividend portfolio to be able to do real estate, or to be able to start like another business or stuff like that too. So the portfolio will be able to be self-managed. So Realty Income will pay me 200, JP Morgan will pay me another 200, Coca-Cola and things like that. They'll be able to keep paying me monthly, so I could just keep buying instead of using my own money in the long run. So where would I buy? I would buy anywhere between 35 to around 45. That's my sweet spot. So right now they are a little bit pricier, around 61 to 62. Right now as of like 2 o'clock, so right before the market closing. So in my opinion, right now it wouldn't really be a good time to buy, especially around the 60s. I would say low 50s. All of 40s and all of 30s would be a really good deal, especially because you're gonna get a higher dividend rate if you were to pay lower and stuff like that too. So Realty Income, I give like an 8 out of 10 for their stock, and then like a 10 out of 10 for cash flow. So if you are really interested in cash flow dividends, Realty Income would definitely be one to buy. Alright guys, thank you so much for watching. Have a good day, and stay safe.